Hi everyone, this is our week 3 presentation for MPA 593 for political campaigns, gaming, and charitable deductions. In this presentation, it's part of our group, so it will be Carlos Alvarado, Raul Duarte, and myself, Mariam Rojo. So let's go ahead and get started. We'll go ahead and provide a copy of our organization's articles of incorporation. We'll provide a copy of the IRS determination letter. We'll provide a portion of the Form 990. We'll identify one or more areas where our organization must be at risk, may be at risk of an UBIT. We'll identify one or more areas where our organization may have an issue related to gaming. We'll identify one or more areas where our organization may have an issue related to lobbying. Identify one or more areas where organization may have an issue related to political campaign activities. And lastly, identify one or more areas where organization may need to provide information that actually constitutes true charitable deductions.
The articles of incorporation are really important because there's some details on here that must be known by all board members. One is the mission statement, which is on section 2. The mission statement states that the primary purpose of the RAP Foundation is to enhance and facilitate health, mental health, and juvenile services in Eastern Riverside County. Each board member should know this. They should know what the mission statement is. And also they should know what's mentioned there on section 5, section A. This corporation is not organized for profit, right? So no part of the net earnings, if any, of this corporation, either during its existence or upon its dissolution, shall ever inure to the benefit of any individual. As mentioned on some of the trainings, none of the monies collected through fundraising or through financial efforts should ever benefit a director, an officer, or a member. And then if this organization is supposed to be dissolved, then all its assets would be distributed to the county of Riverside. I found this really interesting. Also important for the board members to know. And it's important for them to know that no part of activities um, should push propaganda, and they should not attempt to influence any type of legislation or intervene any type of political campaign, as I mentioned on some of the trainings. And also, if there's going to be an amendment to any of these articles of incorporation, then they need approval by the Board of Supervisors of Riverside County. Another important thing that I found was interesting and also for board members to know. The IRS determination letter. It's specifically going to state if they've achieved, if the RAT Foundation has achieved exempt status, and if they have under what section. And in this case, it's section 501A of the IRS code, and this is described further in detail on for 501c3 and the type of exemption that they received. And in this case, they're receiving exemption under an organization. And it also highlights their employee identification number, which is listed on the top, and it has an important date there. Obviously, it's signed, and where the Department of Treasury or the IRS actually sent out this determination letter, and this was from Cincinnati, Ohio. And then the Form 990, rather than go through the entire list of what's included on the return, I included the first page because it lists the RAT Foundation, what type of tax exempt status they're receiving under the 990. This is a 501c3, of course. What type of organization? They're known as a corporation. It also puts the date of their inception or the date they were formatted. This was back in 1992. It lists their employee identification number. Really important for board members to know the funds of the prior year and the funds of the current year, and where these funds specifically correspond to. Uh, on the revenue section under line 8, it has contributions and grants of the prior year and then obviously of the current year, and then also expenses, right? So for example, on some of the expenses, we'll see salaries and compensation and benefits that are being paid out to either the chief executive officer and the employees that work for the RAT Foundation. This is all really important for the board to know because because it you want to have transparency within the foundation, and it's needed under a 501c3.
An area where the Regional Access Project Foundation or any other nonprofit organization could be at risk of unrelated business income tax can be in areas, and an example is an area of the parking lot. The example of the parking lot we could use is if the Regional Access Project Foundation or any other nonprofit organization decides to charge a fee for member parking or visitor parking while they're attending the organization's activities, those can be exempt from UBIT, which stands for Unrelated Business Income Tax. Where the Regional Access Project Foundation or any other nonprofit organization could be at risk is when they use the parking lot for general public parking and they collect a fee. That fee will now be considered unrelated business income tax and needs to be reported. If an organization has questions on if they're at risk for unrelated business income tax, they can also look into the IRS publication 598 and on tax on unrelated business income of exempt organizations. The Regional Access Project Foundation and other nonprofit organizations can come to an issue when it comes to charitable gaming. Some of the types of charitable games are bingo, slot machines, poker, raffle, keno. Those are just to name a few. One risk of charitable gaming is that the games that are being played must be lawful in the state where the organization does conducts business. Another risk is that some charitable games may need uh, special filing requirements and might be required some special excessive taxes in order to be played, but also every game has different reporting measures. As previously mentioned, each game has different reporting requirements. For example, raffle winnings must be reported if the winning is $600 or more and is 300 times the amount of the wager. If the Regional Access Project Foundation or any other nonprofit organization would like further details about tax exemption organization and gaming, they can look at IRS publication 3079.
Substantial part test. No organization may qualify for Section 501c3 status if substantial part of its activities is attempting to influence legislation known as lobbying. So what this actually means is that some organizations may engage in lobbying, but too much lobbying activity can actually impact the organization due to the fact that it can risk loss of tax exempt status. Now, the IRS considers a variety of factors, including the time devoted by both compensated and volunteer workers and the expenditures devoted by the organization to the activity when determining whether the lobbying activity is substantial or not. Now, under substantial part test, an organization may conduct excessive lobbying in any taxable year, but they may also lose its tax exempt status, therefore impacting the income being subject to tax. In addition, through a 501c3 organizations that actually lose their tax exempt status due to excessive lobbying are subject to an excise tax, which equals to 5% of their lobbying expenditures for the year in which they cease to qualify for exemption. Now, expenditure test, an organization or others may elect the expenditure test under Section 501H. And as an alternative method for measuring lobbying activity, under expenditure tests, the extent of an organization lobbying activity will not jeopardize its tax exempt status. Therefore, providing expenditures related to such activity, but does not have to exceed $1 million per year. Under the Internal Revenue Code, organizations are absolutely prohibited from actually both directly and indirectly participating or even intervening in any political campaign on behalf of or in opposition of a candidate for elective public office. Now, contributors to political campaign funds or public statements of the opposition, whether they're verbal or written, made on behalf of the organization in favor or even opposing the candidate for public office clearly will violate the prohibition against political campaign activity. Therefore, violating this provision may result in a denial or even getting their tax exempt status revoked and the imposition of certain excise taxes. A charitable organization must be able to provide a written disclosure of a statement to donors of a quid pro quo contribution that exceeds $75 or more. A quid pro quo contribution is actually a payment made to a charity by a donor, partly as a contribution and partly for goods or services provided to the donor by the charity. Now, the donor has to be able to be informed by the charity that their contributions that are deductible by the federal government, but are also limited when it comes to the excess of any money. Additionally, they have to be able to provide the donor with a good faith estimate of the value of the goods or services that the donor received. Now, the charity must furnish the statement in connection with either the solicitation or the receipt of the quid pro contribution. If the disclosure of the statement is furnished in connection with a particular solicitation, then it is actually not necessary for the organization to be able to provide a statement when the associated contribution is actually received.
Thank you for watching our video, and we will see you again next time.